What's up, XCN family? Got some great news today. The Goliath mainnet is only 2 weeks away. BlackRock has already highlighted that Ethereum is the primary blockchain for tokenizing real-world assets, estimating that over 65% of tokenized asset values is on Ethereum. They say Ethereum as core financial infrastructure for tokenized finance, though they haven't announced a specific project to tokenize bonds or stocks themselves with. But this is where Onyx Coin could play a very interesting role, because this could definitely fit into the picture by providing liquidity for borrowing and lending. It could help unlock more capital for tokenized assets like bonds and real estate by giving investors a flexible way to access liquidity. So, if they expand partnerships and integrate with these bigger tokenization ecosystems, they could carve out a meaningful role. As always, though, it's still early days, so watch how they evolve. But right now, we're looking at XCN. It still operates as an ERC token. So this is very interesting because the mainnet of Goliath is going to allow it to separate itself from the Ethereum ledger. Exactly. So once Goliath mainnet goes live, it will be a standard blockchain separate from Ethereum. The idea is that it will eventually host its own ecosystem, so all XCN and related functionality would be on that chain. Until then, though, it's still tethered to Ethereum. But considering this, I bet you're asking, so does XCN have potential for crazy upside? There's definitely potential for some real upside, especially if they can successfully migrate to Goliath mainnet and build out that separate ecosystem. If they achieve strong adoption, especially in tokenized finance or lending markets, XCN could see a nice boost, and very nice boost. I'm not gonna lie about that. Just keep an eye on how the mainnet rolls out.
Of anarchy, cryptocurrency, blockchains, DeFi should be seen as a tool of ultimate order. And that's a very different kind of perspective, I think, that is worth noting. Smart contracts are not squishy. They execute exactly according to the code. And when there is a problem, as there often is, you can patch it, you can fix it, you can upgrade it, and you can know a priori how the system will actually operate. You can never do that with men, with human regulators. This is a step function improvement.
But the actual settlement is often done with significant delays. Two, the system is not transparent at all. This is one reason why TradFi needs to be heavily regulated, because otherwise it's practically impossible to know what's going on inside of it. The problem it solves is that I think traditional finance some years ago sort of hit the limit of what it could achieve. And I think it's important not to dismiss that. There is a tendency within the crypto industry to treat quote unquote TradFi as just being bad. But we would not have the modern successful economy that we do in America if it wasn't for the very robust financial markets that we have and the banking system that we have. And that wouldn't be possible without both the institutions and the regulators that got us